Very good morning, everyone. How are you all? Very fine, fine. Very fine. Only fine. Only fine. So, what is the difference between fine and very fine? How can you explain this that right now you are fine, not very fine? Something not happen in your life which you were expecting? You are expecting something but that is not yet happened. Then bolo, that happen, you will become very fine. So, what you are expecting? What you are expecting for today? What? Sun. Oh my God. Chalo. Now, the last class we started Ind AS 37, provision, contingent liabilities and contingent asset. We have done the basics related to CA Inter. I hope you have understood the meaning of contingencies. You have understood the meaning of contingencies. Correct? So what is the meaning of contingency? But contingencies is not defined under Ind AS 37. Correct? It was defined under AS4. In exam, don't write as per Ind AS 37 contingencies. Correct now? So what is the definition of contingencies as per AS4? Contingencies are any condition or situation existing on the outcome of which is dependent on happening or non-happening of uncertain future event which is not within the control of entity. I hope you have understood this. Then outcome may be favorable or unfavorable. Favorable means it will give rise to contingent asset. We do not recognize contingent asset, correct, as per accounting standard. Right now we will do what Ind AS 37 says. However, Ind AS 37 and AS are, this AS 29 and Ind AS 37 are mostly same, correct. Then if it is unfavorable, then we need to find out whether the expected expenses or losses are probable and the amount can be estimated. Then we should provide such expenses, correct. In other cases we should disclose the fact. This much we have done. Then we started Ind AS 37. Ind AS 37, first point number A only we have done, that is meaning. Meaning we have done. What is the meaning? Provisions are liability of uncertain timing or amount which requires substantial degree of estimation. Substantial degree of estimation. What is the meaning of liability? One thing we have understood, that all provisions are liability but all liabilities are not provision. So what is the meaning of liability? Liability means present obligation arising from past event which will be settled in future through outflow of resource, and outflow must be probable, correct. Means if these two condition is satisfied, then it is a liability. But with these two condition, if the amount or timing require estimation, then it become a provision. Understood? Means what are the three conditions for recognition of provision? Point number one, there must be present obligation arising from past event. Outflow which is required to settle the obligation must be probable, and a reliable estimation can be made for the amount or timing of the obligation, correct. From examination point of view, question is silent. Point third condition will be assumed to be always satisfied. If you want to write down this point, because sometimes students do this type of mistake. Estimated amount is not given, they will assume that no estimation can be done. But from examination point of view, point number 3 will be assumed to be satisfied every time, correct. Got it? So from examination point of view, if question is silent, always assume estimation can be done. From examination point of view, if question is silent, always assume estimation can be done. If question is silent, know what is the meaning? Question is silent means question has not provided any information, correct. Means from examination point of view, we need to give more emphasis to point number 1 and point number 2. This much you have understood? Yes. Present obligation, we have understood that when obligation is said to be probable. Probable means when chances of occurrence is more than chances of non-occurrence, means it is more likely than not. This also you have understood. Then we have done one special point, point number D, that only those obligations which exist independently from entities future conduct of business should be only recognized as provision. Means we can say in this way that any obligations which are dependent on future conduct of business should not be recognized as provision. However, it may be disclosed as contingent liability. Correct now, but right now we don't know about contingent liability, so we are not discussing when it will be disclosed as contingent liability. Correct? Understood? Correct. But we have understood from the definition of contingency and discussion on contingency that in other cases disclosures are required. Means whenever provisions are not created, then we should disclose the fact. We should disclose the fact. Yes, sir. Correct. Any doubt about this up to this? We can take one more example. Suppose right now we are into recording classes. Correct now. Means, however, we means Chiranjeev Jain classes started recording before COVID-19 also. We started recording before COVID. But can you say due to COVID, most of the teacher came into online classes, and the faculties who are not able to adapt it actually now not into the market, are not into the market. Means the COVID-19 has changed the entire system of teaching, has changed the entire system of teaching as well as learning from your point of view. Now it might happen due to COVID-19 we require some changes in our recording structure. Correct now. For that purpose we require training of staff, existing staff. Correct now. So just try to understand, COVID-19 happened, lockdown happened, everything happened, past event, and now we need to shift from face-to-face class to recording classes. So it means due to this we require training of our existing staff. Now training of existing staff means we require expenditure, means there is an obligation. Yes, so there is a present obligation arising from past event. Should we recognize provision? Have you understood? I have just given one more example. I can give n number of examples, but can I say in exam my example will not match? Means in exam you need to apply these three conditions and the special points. Correct now. So you need to say, should we recognize provision? Means training of a staff. What we require? Training of a staff. For that, of course, we have understood there is a present obligation arising from past event, which requires settlement in future. But should we recognize provision? Yes or no? How many are saying yes? How many are saying no? No, everyone. Then how many are saying yes as well as no? So most of you are saying no. Can anyone give reason why it is no? Functioning of the staff is not yet happened, or can we say in this way that it depends upon future conduct of business? This is the keyword. You need to write down the keywords in exam. If you are writing in your own word, that is okay, but can I say the keyword is what? Can I say this obligation is dependent on future conduct of business? Instead of training the staff, we may hire new employee, trained employee from the market. So training of a staff is not required. Means can I say it, the entire obligation is dependent on future conduct of business, whether we want to train the staff or we want to hire new employee, or we can change our business only. Correct now. We will not start recording class. We'll may decide to shut down our classes only. It depends upon future conduct of business. Therefore, outflow is not probable. Second condition is not satisfied. Therefore, provision will not be recognized. Understood? Have you understood this point? You can write on here. Refer example number 1 to 4. Example number 1 to 4 for your reference. The example number 1 to 4 is given where? In question bank. In question bank. Correct now? So if you have received question bank, very good. If you have not received, already I have given the PDF. Means soon you receive the what? Question bank. So let's see what is the question bank. This is the question bank. Chapter number 5. You can see same chapter number is given, same chapter name is there, question bank. You have question bank, then you can open. If you want to open, open. If you don't want to open, then also open. Correct? So let me first explain you what is the content of this question bank. This question bank I have said all the examples, all the illustrations, all the questions of ICA study material. Means mostly examples and illustration I have taken from ICA study material. Means I don't want to trouble you much by giving my examples. But I feel that these examples can be converted into a questions from examination point of view. And these examples will help you to understand the particular topic. Because every time I can't write example in class. So examples are already given. You can see concept based example number 1, 2, 3, 4 and so on. So this 1, 2, 3, 4 is related to this concept. So I have written refer example number 1, 2, 4. Means whenever you are revising the chapter, you should refer this. So that if you have forgotten the concept, with this example, 1 second everything will come in your mind. Correct. Then you can see after examples, what is given? Let's see. Question from ICA study material. So it means all the question till now in the revised study material is incorporated here. Question from ICA study material. Correct. Then after this, what is given? Let's see. Question from ICA study material. How many questions are there? It is 15 questions. Only 15 questions. 15 questions means 15 minutes. Or let us take 20 minutes or 25 minutes, because you need to read only. Because if you know the concept, you can just go through and you will be able to understand this is the answer. In exam, you need to write down in your own words. You are not supposed to do rectification about the suggested. You are not supposed to do rectification about the suggested solution. You can write down in your own words. If you know the keywords. Keywords means what is the keywords for this concept? Future conduct of business. You need to mention this keyword in exam. If you are not mentioning these, then of course you will not get marks. Means in exam, the fact is that ICA don't give marks for correct answer. Yes, this is the fact. The fact which I always say in class. ICA don't give marks for correct answer, full marks. ICA give marks only when your answer is best answer. Understood? Means from my point of view, if any question of this level is asked, everyone will give correct answer. But are you writing as per the requirement of ICI? Are you writing as per the requirement of ICI? If you are writing as per the requirement of ICI, you will get full marks. Otherwise, average marks. Full marks means 5 out of 5. Average marks means either 2.5 or less than 2.5. So can you say if your answer is correct, it is a high chance you may get less than 50% also. And when you are getting less than 50%, probability of pass is less. Even though your answer may be correct, but that is correct from your point of view, not from ICA point of view. This is the fact you need to understand. Correct? Okay. And how to make it best answer when you are writing the keywords? You need to understand what is the keyword. So for example, some question have been asked about this topic. You have written no provision is required and you have written something. Your answer is correct because no provision is required. But have you written the keyword that it is dependent on future conduct of business? This is the keyword. Understood? Yes, sir. So 15. Then what is given? New question in ICA study material for May 21 attempt. Means for May 21 attempt, ICA study material was revised. So I have incorporated that also. So you can understand these are the new questions for May 21. But now it is 1 second revised for May 22 attempt. But for May 22 attempt, no new question was given for this chapter. Thank you very much. Then you can see question from other sources. This question from other sources I have taken from some reference book. I will not disclose from which book. This question you may or may not do, your choice. It is your choice. If you want to do, if you don't want to, don't do. Because the chances are remote, I will say. But sometime they have asked question from these sources also in exam. So it is your choice. If you want to do, if you do, if you don't want to do, don't do. Because these questions are not from ICI resource. But some of the question I have taken from ICI old syllabus, which can be repeated. Which can be repeated. Understood? Yes, sir. Correct. Then you can see after this I have given some more questions. Question from RTP, MTP exam and GFRS also. Oh my god. Means from GFRS paper, because GFRS and FRS same, Ind AS and IFRS is same. So some question which have been asked in GFRS, which I think is a good question, I have incorporated here also. Some question, not all question. I don't want to trouble much. And I have also written it is a question taken from GFRS. If you want to do, do. If you don't want to do, don't do. But question from RTP, MTP exam must do. Means everything has been incorporated from my point of view. Means from examination point of view, you are not supposed to research any other book. For FR, don't research. And any new question which will be added by ICI, I will only provide. That is my responsibility. I will fulfill it. Correct? But all the questions can't be done in class. I can't do all the questions. You can see how many questions are there. Total number of questions in this small chapter. This is very small chapter. First chapter. Correct? And you can see the total number of questions, excluding examples. Kitna hai? It is 36. So of course I can't take 36 questions in class. But I will take few questions. Balance question, it will be your duty to do it. And if you read it only now, you will be able to understand. So from my point of view, once the chapter is completed, it is my request to you all. My request that please read once all the questions. And if you find any difficulty, give a star mark, next day you can ask me. And whenever you have free time in a day, in your office, wherever you are, if you have free time, just go through this question. It will not take much time. Understood? Yes. So you have understood how I have designed a question bank. It will help you from examination point of view also. What are the questions in ICI study material, RTP, MTP, everything is segregated. Correct? Yes, sir. So when I have written refer, example number 1 to 4, these are the must do. Because I have given the reference. So from my point of view, this may be the important from examination point of view. And the question which are not given as a reference, that also you do. Understood? Yes, sir. So this much I have done in the last class. Any doubt? Any doubt? No doubt. Then let us come to the next point. What is the next point? Point number E. All obligation involve other party. Of course, now in a transaction there will be two party. So all obligation involves other party. But what Ind AS 37 says, it is not essential to know the identity of the other party for recognition of provision. Means for recognition of provision, identification of that party is not required. Name, address, identification is not required. Means even though you don't know the identity of that person, you are supposed to recognize the provision. Let us take one example. Let us take one example. Example is, suppose there is one organization which organize some trade fair. You know trade fair? Correct? There is some entity who organize trade fair. So they have organized one trade fair, and this trade fair was open to public without any fee. Means anyone can come in this trade fair. What happened? On a particular day, this trade fair was overcrowded, and it was overcrowded, and due to negligence of this entity, some accident happened, and most of the public, most of the people either died or injured. Correct? Therefore, the relative of deceased person has filed a case against this organization. Legal case is pending. So on 31st March, what happened? Legal case is pending. I hope you have understood whatever I am saying. Correct? Now, of course, can I say first condition is satisfied? There is a present obligation arising from past event. And can I say if case is decided against company, against this entity, so there is a probable outflow of resource. There is a probable outflow of resource, and which is not dependent on future conduct of business. Obligation is not dependent on future conduct of business. Understood? So if case is decided against the company, they need to settle the obligation through outflow of resource, which is probable, and amount can be estimated. All these three conditions is satisfied. But what this entity says that since we don't know the identity of this person, because who has died, who has been injured, we don't know. Correct now? We don't know. We don't know the identification of that injured person or deceased person, therefore will not create provision. Is it correct? They don't want to create provision because they don't know the identification of the injured or diseased person. Is it correct? Whether they should create provision or they should not create provision. They should create provision. But if just try to understand, very simple question. And from my point of view, even though if I will not discuss this point, in exam you will say yes, we should create provision by applying common sense. Correct now? In exam, suppose these questions come and we have not done this point in class, then also you will say yes only. Arey bolna re. But if you write down, yes, we should create provision only this much, whether institute will give marks. First, all the three conditions need to be given. Then you should write down as per Ind AS 37, even though identification is not known, provision must be recognized. Therefore, in this case, provision is required. If you write down this much, then it becomes the answer as per the requirement of ICI. And most of the students, only what they write down the facts of the case. Yes, provision is required. This much they will write. So that may be correct answer, but that is not correct as per ICI, and therefore marks will not be given. Therefore marks, and even I am checking the paper, I will also not give the marks. Understood? Because we need to select best among exceptional. Understood? So you are not given marks for the correct answer. This is fact. This is 100% fact. You will be given marks for the best answer. Correct? Understood. This point also you have understood? No doubt. Coming to the next point. Correct. Point number F, which is very important from examination point of view. What they say? Legal obligation. Legal obligation you have understood? Means obligation can be legal obligation or constructive obligation. Constructive obligation also you have understood? Yes, sir. Legal obligation arises only when legislation are enacted. Enacted? When an act is enacted? When an act is enacted? When it is signed by President of India and it is notified in official Gazette of India. Correct? Then it is enacted. Means even though bill is passed in both the houses, correct now, but it is not signed by the president, it is not yet enacted. So what they said, legal obligation arises only when legislation are enacted or it is virtually certain. Virtually certain that it will be enacted by the end of reporting period. Means by the end of reporting period, it was virtually certain that it will be enacted. What is the meaning of virtually certain? Virtually certain means not 100% certain, but 95% it is certain. Means if I take in percentage form, chances are that more than 95% chances that it will be enacted. Means when I say probable means chances are more than 50%. When I say virtually certain means chances are more than 95%. Correct? When we say certain means it is 100% certain. Understood? Yes, sir. So legal obligation arises when legislation are enacted or when it is virtually certain that it will be enacted by the end of reporting period. Correct. So how we will know that it is virtually certain that it will be enacted? Can I say this virtual certainty has not been defined under Ind AS 37? Means, can I say it depends upon facts and circumstances of the case and the judgment of entity, whether it is virtually certain or it is not virtually certain. Can I say from Indian context, means Indian point of view, any bill which has been passed in both the houses is virtually certain to be enacted, because in India president is only a formality. Signing by president is only a formality. I hope you are understanding. Correct now. Means in India the public has a power to revert back the act, but president will always sign. Whatever bill has been passed in both the Sabha, president will always sign. Means even though, can I say, the bill is not signed by president, as per Indian context, can I say that it is virtually certain that it will be enacted? It will be enacted. Correct. But from examination point of view, they may give in question only that it is virtually certain. If not given, then you need to apply the facts and circumstances given the question. And if you have a doubt, then I will say, if you doubt whether it is a virtually certain or it is not virtually certain, I will say give both the option, both the alternative answer. Both the alternative answer. Let me take some example. Let me take some example. Whatever I am writing, you should write down. Correct. Suppose this is 31st March. And suppose an entity is polluting the environment. Polluting the environment. Correct? Understood? Let us take some case. Case number 1. Act is already enacted for cleaning up the environment. Understood the case? Because I am not writing the detailed question. Suppose an entity is polluting the environment, it can be air pollution, water pollution, etc., etc., etc. And already an act is enacted that if any entity is doing this thing, they need to clean up the environment. Correct? Whether provision required? Yes or no? Yes, because already there is a legal obligation through enactment of the act. Already the act is there. There is a legal obligation. Correct. When I say for this case 1, provision is required. Provision is required. I think nothing to explain. Correct. Case 2. Act is not enacted. But it is virtually certain that it will be enacted. It will be enacted. Act is not enacted on 31st March, but on 31st March it is virtually certain that it will be enacted. Correct now? Understood. Whether provision is required? Yes or no? Yes. Provision is required. Case number 3. Act is not enacted. Nor it is virtually certain that it will be enacted. but entity has a published policy of cleaning up the environment. Understood this point? Means act is not enacted, nor act is neither the act is enacted nor it is virtually certain that it will be enacted. But they have a published policy of cleaning up the environment, means there is a legal obligation or constructive obligation. So whether provision is required? Yes, provision required if outflow is probable. If outflow is probable, correct? So yes, provision is required. Provision is required. Why it is required? Because there is a constructive obligation. Understood? Case number 4. Neither case 1 nor case 2 nor case 3. Nothing is there. It means no provision required. No provision required. Understood? Have you understood this point? I think understood, okay? Simple. Any doubt? Important from examination point of view, I am expecting a question from this. So when I have written important, means it is my expectation the question can be asked from this topic. You can write on refer. Example number 5 and 6. 5 and 6. Simple. So I think you have understood what is provision. Let me explain you once again so that there is more clarity. This much you have understood? Now we have understood that in this chapter we are discussing about what? Obligation. Which obligation? Arising from past event. In this, no doubt. Now this obligation can be legal obligation, it can be legal or constructive, or it can be constructive. Now you have understood what is constructive obligation, correct? Now if the obligation is present obligation, if the obligation is present obligation means what? More likely than not, means chances are more than 50%. Chances are more than 50%, correct? Means if the obligation arising from past event are present obligation, then what we should do? If obligation are present obligation, then what we should do? Create provision. Bolo yes, correct or not? 100% wrong. Till now you have not understood, because this is only the first condition. Whatever you say, think, because you have only one attempt, not multiple attempts. Think and say, because this is only first condition and you are saying recognize provision. I think till now you have not understood. You are not understanding my emotions. I say there are how many conditions? three conditions. I said there is a present obligation arising from past event. It does not mean you should recognize provision. You need to also go to what? Second and third provision. Means it is a present obligation arising from past event. But with this, there are two more conditions. One is what? Outflow of resource. Outflow of resource is probable. Is probable and reliable estimation can be made. Of course, I said reliable estimation can be made should be assumed if the question is silent, but to answer you should write down that estimation can be made. If you are answering it, so you need to write down yes, estimation can be made. It has been assumed. I hope you are understanding. Yes. So reliable estimation can be made. Any doubt? Any doubt about this? Doubt. Means can I say if these two conditions are satisfied, then we say a recognized provision with present obligation. With present obligation. Correct? Right now, whatever I am writing. Right? Right. Will not say always. Because you are at CA final level. At CA final level, I should not say. But because I am a teacher, aadat hai. Better you write. It will help you for revision only. Have you understood this? Obligation, legal obligation arising from past event. Correct? Present obligation. With present obligation, outflow of resource must be probable and reliable estimation can be made. If all these three conditions satisfied, then what? Recognized provision. A recognized provision. Correct? Now what Ind AS 37 says that obligation can be also possible obligation. Possible obligation. It can be also remote obligation. Remote. What is the meaning of remote? Very less chances, not less, very less. There is a difference between less and very less. Correct now. So when I am saying possible, possible means what? Possible means what? Possible means what? From Ind AS point of view, it is not more likely than not. Correct? Present means more likely than not. So possible is not more likely than not. Means chances are less than 50%. Chances are less than 50%. It does not mean it cannot happen. It may also happen. But right now, as per the condition prevailing on reporting date, chances are less. Correct now? Understood? Means, of course, right now, if I am saying passing percentage is less in CA, it does not mean you will not pass. It does not mean you will not pass. Of course, you will pass. And that depends upon each and every student life, what is going into their life, whether they are preparing or they are not preparing for from IC examination point of view. Yes, sir. So can I say it means less than 50%, but more than 5%. More than 5%. Correct? More than 5%. So we call it what? Possible obligation. Means we can say that these are not probable. Correct now? So present means what? Probable. Probable. So we can say these are not probable. Not probable. Correct. And remote means very less chances of occurrence. Means it is less than what? 5%. less than 5%. Understood? Correct? Now, can I say if the obligation is remote, so as per materiality concept, we should ignore it. Means no treatment required. As per which concept? Materiality. Because can I say AS or Ind AS applies only to which item? Material item. So can I say it is an insignificant item from the point of view of user of financial statement and therefore can be considered as immaterial to the user. And therefore Ind AS 37 says no treatment required. No treatment required. Understanding? No treatment required. Due to which concept? Materiality. Due to which concept? Materiality concept. Means you can see whatever accounting principle, accounting treatment is given, that is based on CA Foundation first chapter. You have done accounting principle and convention, accounting concept and convention. You have done na? Have you done all the concepts and conventions? Bolo yes or no? I am discussing regarding that only. Materiality, conservatism, cost concept, everything. Correct? Going concern. Now, this much you understood? Means one thing is clear that if there is a present obligation from past event, arising from past event, but if either of these two conditions is not satisfied, means either outflow of resource is not probable, or amount cannot be estimated, or both is not satisfied, then we should not recognize provision, but we should disclose it as contingent liability. Means can I say either this is no, or this is no, or both are no? Correct now? Then it means disclose it as contingent liability. Then it means disclose it as contingent liability. Understood? Means contingent liabilities are also present obligation. You can't say contingent liabilities are not a present obligation. Contingent liability may be present obligation, but if it is a present obligation, either of these two conditions is not satisfied. Either outflow is not probable or amount cannot be estimated. It is the wrong definition that contingent liability is not a present obligation. It may be a present obligation also. Present obligation means chances are more than 50%. Correct? Yes, sir. And if it is a possible obligation, then always disclose it as what? Contingent liability. Always disclose it as contingent liability. I think this chart will help you to understand entire treatment. Understood? I hope done. Accounting treatment is done. Means can I conclude? The contingent liabilities are present obligation arising from past event which is not recognized because either outflow of resource is not probable or amount cannot be estimated, or it is a possible obligation arising from past event. Possible obligation arising from past event. Definition done. Can you repeat with me? What is contingent liability? Contingent liabilities are present obligation arising from past event which is not recognized because either outflow of resource is not probable or reliable estimation cannot be made, or it is a possible obligation arising from past event. This is a keyword, arising from past event. This possible obligation arising from future event is not covered in this chapter. So when you are writing only present obligation, this might be wrong term from ICI point of view. So present obligation arising from past event, possible obligation arising from past event. Understood? Have you understood? Keyword are you able to understand? And that keyword I am just defining. Correct? Now just try to understand. If present obligation can be estimated, just try to understand. Means suppose outflow of resource is probable. Let us assume that this condition is satisfied. Outflow of resource is probable. Correct? Only listen carefully whatever I am saying. If present obligation can be estimated, then what? Outflow of resource is probable. Second condition is satisfied. Okay. If present obligation can be estimated, then what? Provision or contingent liability? वो जोर से बोलना. Second condition we have assumed it is satisfied for right now, correct now? The present obligation can be estimated, then what? Provision. Present obligation cannot be estimated, then what? Possible obligation can be estimated, then what? Possible obligation cannot be estimated, then what? I have not mentioned, but you have applied your common sense. Means, can I say possible obligation, even though it cannot be estimated, it should be disclosed as contingent liability, correct? Even though amount is not measurable. But the fact, we should disclose that we are nalayak, we are not able to measure it. Understood? Means, can I say it can be either estimated or not estimated. I hope you all are getting me. Done. Understood? Let's see what Ind AS 37 says. Let's see what Ind AS 37 says. So, what Ind AS 37 says about contingent liability? Contingent liabilities are present obligation from past event which cannot be recognized as provision only, because we recognize only provision in this chapter, which cannot be recognized because either outflow of resource which is required to settle the obligation is not probable, or reliable estimation cannot be made, or it is a possible obligation arising from past event. Correct? If you write down this much, you will get marks, because keywords happen, because all possible obligation arising from past event require disclosure as contingent liability. But the exact definition is what? Possible obligation arising from past event, the existence of which will be confirmed by happening or non-happening of uncertain future event which is not within the control of entity. Already we have done the definition of contingent, but not required. If you have written this much now, from examination point to be over, because all possible obligation arising from past event require disclosure as contingent liability. Understood? But एक बार repeat करते हैं. Can you repeat with me? कि provisions are liability of uncertain amount or timing. Definition over. Now, if you want to write down the definition of liability, you can write down that also. Contingent liabilities are present obligation arising from past event which is not recognized as a provision. Why? Because either outflow of resource which is required to settle the obligation is not probable, or reliable estimation cannot be made, or it is a possible obligation arising from past event, the existence of which will be confirmed by occurrence or non-occurrence of uncertain future event which is not within the control of entity. You can remember. Not so hard. Correct? Recognition. Will you recognize contingent liability? No, never. Will never recognize it till it become provision. Correct? Means we need to wait. It might happen for the first year it is a contingent liability, second year it may become what? Provision, because the circumstances may change year to year. Correct? So, not recognized but required disclosure in the financial statement. When I say required disclosure in the financial statement, so in financial statement where we disclose? So notes to account is a part of financial statement. So when I am saying disclose in financial statement, it does not mean on the face of balance sheet. Correct now? So it requires disclosure in notes to financial statement. Unless outflow of resource is remote. So what they are saying, if the outflow of resource is remote, then you can ignore disclosure. Means, I hope you are understanding. If the outflow of resource is probable, then disclose it. If outflow of resource is not probable, then also disclose it. But if the outflow of resource is remote, chances are very less, then ignore it. Outflow of resource. Correct now? Means, can I say, what they are saying, unless outflow of resource is remote, means can I say in this way, if outflow of a resource is probable, then will you disclose it as contingent liability? Bolo yes or no? Yes. If outflow of resource is not probable, not probable means chances are less than 50% but not remote. Correct now? Not probable. Then what? Will you disclose it? Yes or no? Yes. Very simple. Correct. But if outflow of resource is remote, then ignore it. Then contingent liability disclosure is not required. You can ignore it. Totally ignore it. Simple. Simple. Probable, not probable, remote. Probable, not probable, remote. Understood? But possible you can't, possible obligation you can't say, possible obligation is what? Not probable. Correct now? Understood? Have you understood this point? Yes, sir. Following disclosures are required for contingent liability. First is the nature of event. What is the event? Second, the effect on financial statement if it can be measured. Effect on financial statement means amount which can be measured. And if the effect is not determinable, means if the amount cannot be measured, facts should be disclosed that we are not able to disclose, we are not able to measure it. This fact need to be disclosed that we are not able to measure it. Understood? Yes, sir, we are. Any doubt about contingent liability? Any doubt about contingent liability? Can I don't refer example 11. Correct. Let us come to contingent asset now. Now contingent asset, what is the meaning given? It is just reverse of contingent liability. Let's see what they have given. Means for contingent liability there is an outflow. So contingent asset means inflow. Inflow of resource. Resource can be cash or any other asset. Resource can be cash or any other asset. So what they said, contingent asset are possible asset. Possible asset means inflow. Possible asset means for asset they have not used the word present asset. Understood? Means for obligation they have used the word present, possible and remote. But for asset they have used the word what? Possible and of course a remote. If there is a remote, then it will be no treatment. Are you getting this point? Have you understood? Correct? Means asset can be either asset or possible asset. Asset or possible asset. So what they are saying, contingent asset or possible asset. Possible asset arising from past event. Arising from past event. Understood? The existence of which will be confirmed by occurrence or non-occurrence of uncertain future event which is not within the control of entity. Means, can I say if you reverse this definition, it will become the definition of what? Contingent asset. Yeah. Contingent asset or possible asset arising from past event, the existence of which will be confirmed by occurrence or non-occurrence of uncertain future event which is not within the control of entity. Contingent asset definition also you have understood? Correct? Yes, sir. But what about accounting treatment means recognition and disclosure? Recognition and disclosure. I think as per AS 29 contingent asset, what you have done in your CA enter, that it will not be recognized, it will be disclosed where? Contingent asset will disclose where? As per AS 29. As per AS 29 contingent asset required disclosure, it does not require disclosure. It required disclosure, it does not require disclosure. Oh, it does not require disclosure? Yes or no? Correct? Forgotten. Contingent asset does not require disclosure. It does not require disclosure in notes to account, but it requires disclosure in the report of approving authority. Report of approving authority means what? Means examples is what? Director's report. Correct now. Means what AS 29 says that it does not require disclosure where? Notes to account, but it may be disclosed if the amount is material where? In report of approving authority. My question is that AS or Ind AS is applicable to financial statement or it is also applicable to director's report? Financial statement means whatever you are disclosing in director's report, nothing to do with AS or Ind AS. Can you see that was bakwas point? In director's report we can disclose anything, whatever we want. Are bolna re? So can you see that was a bakwas point? If you want to disclose anywhere, but it was not to be disclosed in notes to account. But what Ind AS 37 says? Ind AS 37 says if inflows are virtually certain. If inflows are virtually certain means what? Chances are more than 95%. If it is virtually certain, if inflows are certain, then it is an asset. Then we are not discussing here. But if inflows are virtually certain, chances are more than 95%. What Ind AS 37 says, it is not a contingent asset, it is an asset. And if it is an asset, recognize it. Understood? So if the inflows are virtually certain, it shall be recognized as an asset, not treated as contingent asset. It will be recognized an asset, means past journal entry. Past journal entry. If it is virtually certain. Correct? Doubt? No doubt. Bolo, yes or no? Correct? Chalo, if no doubt, okay. Can I proceed? Can I proceed? Bolo. If you'll say yes, then only I will proceed. So what they are saying, if it is virtually certain, then it is not a contingent asset, it is an asset. And if it is an asset, recognize it. Past journal entry. If it is probable means chances are more than 50%. But in this case, more than 50% but less than 95%, na? Because if it is more than 95%, then it will become virtually certain. Bolna re. Yes, sir. Probable. If inflows are probable, then no asset will be recognized. No asset is recognized. Why? Because it is a contingent asset. And for contingent asset, Ind AS 37 says required disclosure. Where? In financial statement. Oh my God. Of course, if you want to disclose in financial statement, why you are disclosing in report of approving authority? That is not a part of financial statement, and user will never rely on director's report. User will see only what? Notes to account. If you want to disclose where? In notes to account. Understood? So this is one difference between AS 29 and Ind AS 37. Have you understood? So if inflows are probable, then it is a contingent asset and that require disclosure in financial statement. But if inflows are not probable, means chances are less than 50%. Can I say it will also include remote? It will also include remote chances. Are bolna re? Correct? No treatment required. No treatment required. Now, of course, even though you are not saying, but I have understood from your face, you have not understood this. From your face, I have understood. Because why from your face, it seems that you have not understood. Because some eyebrow was going like this. And even I am a student, I have also not understood. Why? I don't know whether you have understood or not, but let's see. You can see for obligation, either it is probable, not probable or remote. But for inflow, means for outflow they have said probable, not probable or remote. For inflow they are saying virtual certain, probable, not probable. The question is that why they have given this point. Why they have not given this point for outflow? Now doubt will come. Now doubt will come. One thing is clear that with this entire discussion, but the Ind AS or AS is more strict for recognition of inflow or for recognition of outflow. They are more strict for recognition of inflow or recognition of outflow. For recognition of, if they are strict for recognition of outflow, or they are strict for recognition of inflow. Conservatism say what? Don't recognize income, recognize what? Expense. So we are strict for what? Inflow. We are more strict for recognition of inflow, na? Outflow बोला recognize करो. Liability recognize, but don't recognize asset. You can see even though inflow is probable, we are not recognizing it. But if outflow is probable, we are recognizing it as what? Provision, liability. अरे बोलना रे. Doubt is there. Now doubt आ गया. Now you are confused. You are confused or not? Just ये भी नहीं पता है. You don't know whether you are confused or not. Have you understood? Then I will not discuss. If you say yes, we have understood, then I will proceed. Understood? 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 Not understood. Awaz is not coming. If the voice is not coming, means you have not understood. That only I have need to. Let us first understand one summary. Then I will come to virtually certain. Correct now. I will not leave you till you understand. Till you will have a smiling face, I will assume that you have not understood. You need to have a smile face. Then only I can understand, yes, you have understood. You are like this. Oh my God. Outflow, inflow. Outflow, inflow. 100% certain. 100% means what? It is certain. Correct? Understood? Correct. So can I say 100% certain? Outflow means liability, inflow means asset, no doubt. Recognize liability, recognize asset. Then more than 95%, less than 100%. Can I say it is virtually certain? Virtually certain. So can I say, if I say probable for obligation, if I am saying probable but not virtually, and we are not using the word not virtually certain, so probable include virtually certain because it is more than 50%. When I am saying chances are more than 50%, it will also include chances are more than 95%. Are bolna re? Correct. So can I say, if outflow is virtually certain, we should recognize it as what? Provision. Means provision is nothing but liability. Provision is nothing but liability, means we are recognizing liability. And if inflow are virtually certain, we should recognize what? Asset. Means both are same to this extent. Means for inflow and outflow, first point and second point are same or not? Are you getting now? Correct. Now, if it is more than 50% but less than 95%, we can say it is probable. Probable, but not, it is not virtually certain because I have written less than 95%. Correct. Now, in case of outflow, we will recognize provision. We are recognizing liability, but we are not recognizing asset. We are only disclosing what? Contingent asset. Means we are more strict for inflow. We are more strict for inflow due to which principle? Conservatism principle. This is only conservatism, na? Are you getting? Yes, sir. When I am saying provision, provision is nothing but liability. Means we are recognizing liability. We are increasing our liability. Understood? Yes, sir. Then when I am saying less than 50% but more than 5%, it means what? Not probable. It means not probable. And you can see for outflow, we are disclosing it as contingent liability. For inflow, no treatment. We are more strict for inflow. No treatment means no disclosure also required. No disclosure also required. Are you getting? For inflow. For outflow, disclosure required as a contingent liability. As a contingent liability. And when it is, less than 5%, we call it what? A remote. And remote, no treatment due to which concept? Materiality concept. I hope thora you have understood. Thora. But till now, you have not understood this point. I know you have not understood. Because if you have understood, you should have asked me, sir, give me one example. Not leave me. Sir, give me one example. Can you give me one example virtually certain? If you have understood. And if you are saying if you understood means you can create example. Are bolna re. And if you are not able to create any example means you have not understood. So how can you say yes sir we have understood? And if you have understood, give me example. Huh? Oh my god. Effort tax. Please leave it right now. Huh? Very good. Excellent. Debtor. Debtor is one of the examples. Very good. Excellent. Let's see how it is correct. Can I say we always recognize credit sale? Credit sales. From Bachpan we are recognizing credit sale. My question to you, whether for credit sale inflow is certain or not certain? Not certain, but it is virtually certain. Because we will do credit sales only to which customer? Known customer, a reputed customer. So if there is a credit sale, we can't say it is certain, but it is virtually certain. And therefore we recognize what? Receivable, debtor. Even though it is not 100% certain. It is virtually certain. Understood? Correct? So, good example. And can I say from Bachpan we are doing that? Anytime credit sales, we are recognizing it. Why? Because we do credit sales to known customer or reputed customer. Correct? Now, to unknown customer, will never do any credit sales. Will you do? I will also not do. Understood? It means credit sales, it is recognized as an asset, as inflows are virtually certain. However, from examination point of view, don't worry. They will use the word virtually certain. And if question is silent and you are not able to decide whether it is virtually certain or it is not virtually certain, I will say give both the opinion. Okay, suppose some inflows are there which are not certain and question is silent whether it is virtually certain or whether it is probable. You will have a doubt in exam what need to be done, whether it will be recognized as an asset or you should disclose it as contingent asset. I will give both the option. Whenever in exam clear information is not given in the question, then give alternative answer for margin of safety, because you don't know what ICI is thinking that in that regard. Both the answer. Simple. If this is the case, we will do this. This is the case, we will do this. Simple. Now I hope you have understood the entire point. I hope you have understood. Correct? Once, can you read this summary? If you can understand this, it means you have understood provision. Ever read it? And if you have doubt, raise your hand. First read it, I'll come to you. Just check whether this entire summary is correct or not. NA means not applicable. Once the obligations are removed, other two condition is bekar now. Obligation is removed, no treatment. Therefore, I mentioned not applicable, not applicable. Got it? Is it correct? Have you understood? So why I have given this summary? Whenever you want to give this remark, always think about these three conditions in exam. Please always mention, yes, these three conditions, all the conditions satisfied and provision. If some of the conditions not satisfied, then what? Contingent liability or not treatment. You need to write down that facts. Understood? Very good, sir. मजा आ रहा है. Okay. Next point. Point number 4, which is also very important. Now you have understood when to recognize provision, when to disclose contingent liability, and when no treatment. Now the question is that what will be the amount of measurement? Reliable estimation can be made. So how to measure it? Correct? Understood? One thing is clear, that estimation is required, but how to estimate? There should be some rules. So that rules is given in Ind AS 37. Same rules was given where? Under AS 29, but under Inter, normally I have seen teacher don't discuss this. I don't know why. Because institute don't ask question from this topic. That may be the reason. That may be. Have you done the measurement principle under AS 29? Hello, yes or no? I think no. But it was given under AS 29. Correct? So what they said, measurement of provision, and of course contingent liability also require measurement. Contingent liability also require measurement for disclosure purpose. So simple word, what Ind AS 37 says, it will be best estimate. Best estimate. One word, best estimate. Of what? Of expenditure. Of expenditure, which is required to settle the obligation. Best estimate of expenditure which is required to settle the obligation. At which point of time? At the end of reporting date. Oh, acha. Just try to understand, this is keyword. At the end of reporting date means, everyone, I want your suggestion, that just take one example. Suppose this is the reporting date, 31st March 2021, and condition A, condition B, condition C satisfied. So we recognize provision. Now we need to estimate two things, amount as well as timing. Either of these may be certain. Either timing may be certain or amount may be certain. So other we need to estimate. Suppose both need to be estimated. We have estimated that the amount is payable after 5 years. This is an estimated time. Estimated time, and at this point of time, the amount payable is 10 lakh. Amount payable is 10 lakh. This 10 lakh is payable at the end of 5th year. What is the reporting date? 31st March 2021. But 10 lakh is payable not on 31st March 2021. It is payable at the end of 5th year. My question is that we will recognize provision here. Provision amount should be what? Provision amounts will be what? 10 lakh or it will not be 10 lakh? Understood? Are you able to understand what I am saying? One second, let us read the content. Let us read the content. Best estimate of expenditure which is required to settle the obligation at the end of reporting period. At the end of reporting period. At the end of reporting period. Correct? What example I have given? At the end of reporting period. This is the end of reporting period. And we have estimated that amount is payable at the end of 5th year. And the amount is 10 lakh which is payable at the end of 5th year. My question is that provision will be 10 lakh or it is not 10 lakh? 10 lakh or it is not 10 lakh? How many are saying it is 10 lakh? How many are saying it is not 10 lakh? Is something you have understood? So if you are saying not 10 lakh, what will be the amount? What will be the amount? All information you have now. You are chartered accountant. Everything I will not give, huh? No, no. Nalayak, it is not expense, it is liability. It will be more than 10 lakh. Mahanalayak. Yes. You have done FM or SFM? So you know the concept of present value. Correct. If you want to settle the obligation on 31st March 2021, it will be less than 10 lakh due to time value of money. Due to time value of money. So that is what Ind AS 37 says. It will be present value of what? Rupees 10 lakh. If you know the rate of interest, discount it, and the amount you can calculate. Amount you can calculate. So can you see, you need to find out expenditure which is required to be settled at the end of what? Reporting period, not at the end of estimated time. And the like present value is always less than future value, because this 10 lakh include interest. FM forgotten. FM you have done? So present value means what? This is future value. If you discount interest means it include interest. Minus interest, so less one. Correct? Okay. If you have forgotten present value, you can discuss after class, because I don't know FM. I need to first study and then explain you. Correct? Understood this point? Present value you all know. So can I say we need to do discounting? Now AS 29 was silent regarding what? Discounting. AS 29 says provision will recognize that undiscounted amount. Ind AS 37 says provision will recognize at discounted amount if the time value of money is material. If the time value of money is material. What is the meaning of time value of money is material? I am coming soon. But have you understood this point? Have you understood this point? Are bolo, yes bolo. Otherwise I will think you are not understanding anything. Then what is the use of face-to-face class? Better you come virtually only. I will also teach from my home. You also learn from your home only. Correct now? Believe me, this batch size is the least batch size in my life. But I am taking because I want to take. I want to take. 2 year bahut ho gaya. I want to take class, face-to-face class. Understood? Means every day I require motivation to come into the class. Bolna yes or no? Yeah. I require motivation, and if you will do, then I will say better. You will also sleep, I will also sleep. Correct now? Yes sir. So once again, best estimate of expenditure required to settle the obligation at the end of reporting date. Correct? This para you understood means I am discussing each and every line word to word. Correct? Now the question is, sir, how we will estimate the best amount? How will estimate the best amount? So what is best estimate? Correct? Can I say it is a matter of judgment? Judgment of what? Auditor or management? Management or auditor? Management. Why management? Because financial statement is a responsibility of management. Correct? That is only given. Estimation are determined by management judgment. But whatever judgment taken by management should be supported by some evidence. And that evidence we audit. What we do? We do audit of evidence. Whatever judgment given by the management is correct or not as per that evidence. Understood now? So auditor role is to audit that evidence which support that judgment. Understood? But I am not teaching audit right now. Correct? It need to be supported by experience of past transaction. Means similar transaction was done in past year and it is settled. So at what amount it was settled? So can I say experience of past transaction or report of an expert? We can take the help of an expert. For example, some legal case is pending, so we'll take the help of lawyer. As per the lawyer, what amount is payable as compensation? They will give an idea about that. Correct? Yes, sir. So it need to be supported by an experience of past transaction or report of an expert or any additional evidence provided by event occurring after reporting date. Is which chapter? AS4 is Ind AS 10. Coming soon after this chapter. Means, can I say this point number 3 I will discuss where? Ind AS 10, and Ind AS 10 means AS4 was introduced because of this point. Means there may be some additional evidence after reporting date but before approval of financial step which provide further evidence. So any additional evidence provided by the event occurring after reporting date. But this third point I will discuss where under Ind AS 10 coming soon. Experience of past transaction. Let me take one example. Suppose I have announced in front of you all that I will refund 50% of fee. Correct? If you score 90 or more than 90, I will always repeat this point so that you don't forget this point. Now, can I say I have a constructive obligation and outflow is also probable and reliable estimation can be made because I can estimate based on past batch. Now, suppose in the past batch out of 100, 2% score what? More than 90. This is quite possible. So right now, I will count the number of students, multiply by 2%, that is the number of students, multiply by fees into 50%, the best estimate of the expenditure. Similar transaction has been done in the past batches, so I can take the help of that. And if that is not available, take the help of what? Expert. That is also not available, then wait for the additional evidence. Understood? Understood. However, normally in practical scenario, this point is taken into consideration. Expert of past transaction. Normally. Correct? Understood? Yes, sir. Correct. Now, you have the supporting evidence, but how to measure that amount? How to measure? So what Ind AS 37 says? When obligation involve large population, correct? Large population means what? Let me take one example for that. Large population means there is not one individual obligation, they are large population. Means, for example, in my example of constructive obligation, there are many students now. I will not do case one-to-one relation, whether C will score, whether C will score, whether he. I will not do like that. I will take the bunch of students. Correct? Are you able to understand? And I have multiple batches also. I may have some other batches also. So I need to take all batches into consideration. It means obligation involve what? Large population. Obligation involve large population. Let me take one example for this. What I want to say. Suppose during the year sales were made to many customers. Correct. Suppose 1 lakh unit has been sold. 1 lakh unit has been sold. Correct. With warranty. Warranty means if any defect arises, manufacturing defect is there. Correct now. So the item will be repaired or it can be replaced depending upon the circumstances. If the defect is found within 6 months or within 1 year from the date of sale. Correct? Now, can I say this is 31st March? So it might happen 1 year is not yet expired. Means warranty period is not expired. So can I say on 31st March there is a present obligation arising from past event and outflow is probable. An estimation of course we can make. So how to estimate? Correct? So can I say will depend upon past transaction what happened in last year? Correct? So can I say we need to find out what was the case. So as per the past transaction information will be given in the question. That information will be given the question. Correct now. So as per the question it is given that 70% of customer will come with minor defect. minor defect. 20% will come with major defect. As per past transaction we can analyze, and 10% no defect. Quite possible. And can I say, as an entity we can estimate the amount of minor and major defect. If there is a minor defect, we can always estimate what will be the amount of expenditure for that minor defect. Correct? So as per the information given by the management, if there is a minor defect, cost will be 1,000. If there is a major defect, cost will be 2,500, and no defect, so no cost. Understood? Correct? So can I say, in this case you can see it involves large population. So what Ind AS 37 says, will calculate the expected value of obligation. Expected value of obligation means weighted average of all possible outcome. Weighted average of all possible outcome. So there are how many outcome? 3 outcome. We need to apply weighted average. So of course you are expert in weighted average. So what will be the amount of provision? Amount of provision will be what? 1 lakh into what? 70% into what? 1,000 plus 1 lakh into what? 20% into what? 2,500 plus 1 lakh into what? 10%. Amount is 0. So of course you can calculate. Can you give me the amount? Because I don't have calculator, you have calculator. Total can you give me? Don't have calculator? Bring calculator. Huh? Give me the amount. Fast. 12,000. 12 crore. Amount is correct, na? I am not good in calculation. So this much amount should be recognized as provision. Correct? Yes, no. Why? Like this is only weighted average. We'll do divide by 3. Arey weight we have given. This is weight. This is the outcome weight. 70%, 20%, 10% is the outcome weight. Or kya weight doge? Weight means what? What is the meaning of weight? In weighted average, what is the meaning of weight? Weight means weighted average, na? Simple average we do this plus divide by 3. In weighted average we do 70, means this is nothing but 1 lakh into 70%, 1 lakh into 20%, 1 lakh into 10% divided by what? 70 plus 20 plus 10. वही तो होता है. Was saying you are saying something different. Whether this amount should be recognized as provision, you said no. I was thinking some different point. This amount is not a present value. अरे बोलना रे. So what Ind AS 37 says that if the time value of money is material, then discount it. If the time value of money is not material, then no discounting is required. What is the meaning of that? I will come explain. Don't worry. But you can write down. If time value of money is material, then we need to recognize discounted amount. Since we don't have the rate of interest right now, we can't discount, and we require the timing also. Understood? Now that information I have not given to you. Discounted amount, but I know you are expert in discounting. You are expert in discounting, so I will not teach you discounting. If time value of money is not material, if time value of money is not material, then at undiscounted amount, can I say time value of money is material if it is payable after 1 year? If it is payable within 1 year, then it means time value of money is not material. Means Ind AS 37 has not defined what is the meaning of time value of money is material or not material. It depends upon judgment. And as per FM, we know if it is payable within 1 year, then time value of money is not material. So from examination point of view, this means what? Amount is payable within 1 year, and in this amount is payable after 1 year from which date? From reporting date. Okay, after 1 year from reporting date. That is understood. Simple. Simple. Correct. Simple. Can I say if these informations are given, you can calculate weighted average of all possible outcome. And if discounting information is given, discount it. If discounting information is not given, it means time value of money is not material. That only assumption we need to take from examination point of view. If the rate of interest is not given, can you discount it? You can't discount it. Are you getting whatever I am saying? Yes, sir. Understood this point? Yes, sir. Let's see what Ind AS 37 says. When obligation involve large population, determine expected value of obligation, that is weighted average of all possible outcome. Weighted average of all possible outcome. Correct. But when there is a single obligation with two possible outcome, understood? Single obligation with two possible outcome means there are two possible outcome, not more than two possible outcome. Are you getting what I am saying? Correct? Not understand. Then what they are saying? Provision is created based on most likely outcome. Not understood. Let me take one example. You will understand only with examples. Let me take one example. Suppose on 31st March, a legal case is pending. Can I say legal case is pending? So one case is pending. Correct. Now one case, single obligation, one case. Now for an entity, it might happen there are more than one case is pending, but in my example only one case is pending. So single obligation. Understood. Now let us assume all three conditions are satisfied. The provision is required. Correct. Now in this case we'll take the help of lawyer about the best estimate. Now as per lawyer, there can be two type of information given. Case 1, case 2. Case 1, they have said chances of high damage is 20 lakh. So chances of high damage is 20%. My mistake. Amount is what? 20. And amount of damage is 20 lakh. Understood? Chances of low damage is 60%. And amount of damage is 2 lakh. And chances of no damage No damage means chances of winning. Damage means chances of losing the case. Correct now? So here the total chances of losing the case is what? 80%. Means present obligation. Are you getting or not? Yes, sir. Correct? So in this case, it is what? 20% more. That is no damage. This is case. Case 2, the information can be given in this way. The information that chances of damage 80% is 15 lakh and chances of no damage 20% is nil. Understood? Correct. You can see in this case there are only two possible outcomes. Two possible outcomes. So what India 37 says that don't apply weighted average in this. Don't apply weighted average in this case. Take most likely outcome as what? Amount of provision. So what is the most likely amount? 80%, 15 lakh. So amount of provision will be equal to 15 lakh. In this case, correct now. What India 37 says, you can take either most likely outcome, or you can take weighted average also. Weighted average means because there is a single obligation now. Single obligation. So if you take most likely outcome, what will be your answer? Most likely outcome is 2 lakh. Then your answer will be provision is equal to 2 lakh. Correct? Or if you apply weighted average of all possible outcome, weighted average of all possible outcome, then what will be your answer? Batao. It is 20 lakh multiplied by 20%, then 2 lakh divided by 60%, multiplied by 60%, and 0 into 20%. What is the amount? 5 lakh. 5 lakh 20,000. So 5 lakh 20. I hope you understand. Correct? Understood. However, this type of question has not been given in ICS study material. This type of question is not given in ICS study material. Correct? Only either this type of question is given or this type of question is given, large population. But I hope you are understanding my emotion. Means, can I say whatever information is given, you can easily calculate the amount of provision? Now you can easily calculate the amount of provision. Understood? Correct? Yes, sir. When I say yes, sir, understood, does not mean you have understood. Huh? Why I am saying yes, sir, understood? Because I need to go to other point. So I am assuming that you are understanding. And even though you are not understanding, you need to stop me. Correct na? So it is my habit to say yes, sir, understood. Because you don't say, so I need to only say. Are bolna re? Yes, sir. Correct. Why I am saying this point? Because one of the students has given a comment on me that this sir always assume that the student have understood. But I need to assume now, otherwise I need to wait for 1 hour. I need to assume this now because I need to complete the syllabus also. Are bolna re? When I am saying yes sir understood, it does not mean you have understood. I am clarifying. Correct? But I need to go to other point. Therefore, I need to assume that you have understood. Yes, sir. Now, in this I don't refer question number. When I am saying question, so you need to go to the questions, not example. Question number 5. Let us see question number 5. Question number 5. Some question will take so that you'll feel good that I'm taking questions. But even though I don't take any question, all questions can be done by you because I am explaining each and every point with examples. Let's see. An entity sells 1000 units of a product with warranties under which the entity will repair any manufacturing defect that become apparent within the first 6 months after purchase. First 6 months means time value of money is not material. Understood this point? If a minor defect is detected in a product, estimated repair cost is 100 will result. If a major defect is detected in a product, estimated repair cost is 400 will result. The entity's experience together with future expectation indicate that 75% of the goods sold have no defect, 20% minor defect, 5%. Similar example. Whether you want me to do it or you can do it by your own. You can do it by your own. But in this solution, they have not said about time value of money. So you can also mention that since the time value of money is not material, provision will be recognized at undiscounted amount. That will become best answer. That become best answer. Correct? Understood? This point also got it. Note. Let me complete this few point, then we'll take break. Now, provision should be measured before tax. Of course, can I say provision is a charge against profit before tax or after tax? So, should we do the amount net of tax? No. Can I say this is only a clarification given, even though not given, we'll never do net of tax? Understood now? The provision should be measured before tax, not after tax. Similarly, discount rate should be pre-tax or post-tax? Pre-tax. Why? Because provision is charged against profit before tax. Can I say this is only two clarification given, even though not given, we'll do it only. But in exam, be careful. Sometimes they may give rate of discount post-tax. So you need to convert post-tax rate of interest into what? Pre-tax rate of interest. You know how to do it? I think FM you have done that. Rate of interest pre-tax, post-tax. If you have not done, we'll do somewhere. But discount rate should be pre-tax. Correct? Be careful in exam. They may confuse you by giving both rate. They may confuse you by giving both rate. Yes, sir. Amount of provision shall be the present value of expenditure if the effect of time value of money is material. Now you have understood when the time value of money will be material. If it is payable after 1 year from reporting that, then we'll assume that the time value of money is material from examination point of view. Practically apply the facts and circumstances of that case. Understood? Yes, sir. So time, what is the keyword? Keyword is what the time value of money is material. This is the keyword. In exam, you should mention this when you are doing discounting. Correct? Yes, sir. Gain from expected sale of assets shall not be taken into account for measurement of provision. Gain from expected sale of assets shall not be taken into account. Let me take one example. You will say what should be done. Okay, na? Let me take one example. Good point. Till now no question have been asked from this point. Correct. Suppose before 31st March, one machinery or plant was destroyed. Correct? It was destroyed due to some accidental event. So it require repair. It require what? A repair. And on 31st March, till now, repair expense not yet incurred. My question to you is, should we create provision for repair? Bolo. Should we calculate provision for repair? Why no? Depends upon future conduct of business. depends upon future conduct of business. Provision is not required. Provision is not required. But if I say repair expenditure, repair activity is started. It is a use plant and machinery. You started the repair work. And you don't know how much expenditure will be incurred. Then so it is required. Bolo yes or no? Because there is an obligation as a result of past event. Understood now? So can I say in this way, the repair expenses is what? Started. Yeah, commenced. It is commenced. Repair activity is commenced, but not yet completed. Quite possible. You require provision for repair or not? Provision for repair. Now one doubt will come. What is the doubt? If suppose repair expenditure is 10 lakh, and what management is thinking that after repair they may sell it. They may sell the asset. Correct now? And they may be gain from sale of asset. Gain from sale of asset. Bolo yes or no? Are you getting what I am saying? The repair expenditure will be 10 lakh, and if the asset is sold after repair, they may be gain from sale of asset. And gain from sale of asset, let me assume that they have estimated it will be 2 lakh. This is also one estimation. The question is that should we consider a gain from sale of asset to calculate the amount of provision? Means amount of provision will be 10 lakh or 8 lakh. Means gain from sale of asset should not be considered. That point is only written. Can I say, even though I am not discussing that point, you can apply your common sense in exam and you can write down the answer. But what is required? As per Ind AS 37 is given where? Under Ind AS 37. Gain from expected sale of assets shall not be taken into account for measurement of provision. Till now, no question have been asked from this point, but I am expecting a question from this point. I am expecting. Expected. Understood? Correct? Simple. We'll take a break. After break, we'll continue. Can we start once again? Yes, sir. One doubt has been asked from type class batch that, sir, could you give an example for contingent liability where there is a present obligation but outflow of resource is not probable? Can I say already I have given when which example? Aeroplane example. Aeroplane example, overhauling expenditure wala example. Then we have given that factory example. Correct now? Then today also I have given staff training example. That case outflow of resource is not probable, but there was a present obligation arising from past event. Therefore we may disclose it as what? Contingent liability if outflow of resource is probable. Understood? Correct? Doubt over? Yes, sir. Now, before break we were discussing about measurement. Measurement, you have understood that it is a best estimate of expenditure required to settle the obligation at the end of reporting period. Estimation are determined by management judgment, which should be supported by either past transactions, similar past transactions, or report of an expert, or any additional evidence provided by the event occurring after reporting date. How to measure? When the obligation involve large population, that will determine the expected value of obligation. So this is known as expected value of obligation, that is weighted average of all possible outcome. When there is a single obligation with two possible outcome, we'll apply what? Most likely outcome. The keyword is what? Most likely outcome will be considered. Most likely outcome will be taken without any average. Yes, sir. Then provision should be measured before tax. Discount rate should be pre-tax. Amount will be the present value of expenditure if the time value of money is material. Gain from expected sale of assets should not be taken into consideration. Correct? Now, the last point for this is risk and uncertainties. What Ind AS 37 says that even though you have calculated the expected present value, expected present value, but due to risk and uncertainty associated with that transaction, it might happen you are paying more than expected present value. Understood now? So there are many risks and uncertainties which are associated with that particular transaction and event. Therefore, we should also give importance to that risk and uncertainty for calculating the best amount of expenditure. Correct? Understood? So what India 37 says, the risk and uncertainties that surround many events and circumstances shall be taken into account in reaching the best estimate of a provision. Correct? A risk adjustment should be made for the amount that the entity would pay in excess of expected present value of outflow, which we have calculated. Entity would pay in excess of expected present value of outflow due to uncertainty attached with the actual outcome, because actual outcome may be different from estimated outcome. So there are some risk and uncertainties. Whatever we have estimated, that might be changed as per the change in circumstances. So what they are saying, that risk adjustment is also required. But how to do that risk adjustment? So what India 37 says, that if you have some risk and uncertainties, risk adjustment can be accounted in the given ways. So they have given how many ways? 3 ways. They have given how many ways? 3 ways for the risk adjustment. Means from examination point of view, very, very easy. Practically, this may be a difficult circumstances, okay, how to identify the risk and uncertainty. But from examination point of view, they will give you the risk adjustment. Now, how to apply that risk adjustment, that we need to understand. So they have given how many ways? 3 ways. They have given how many ways? 3 ways. First, either by adding to the expected present value of future outflow. Either by adding to the expected present value of outflow, means they will give you some amount of risk adjustment, you need to only add it. Correct? Or by adjusting the estimate of future outflow, or you need to increase the future outflow. Correct? Or by adjusting the discount rate. Means if I take the example, whatever I have taken, if I take that example I have taken this example. Suppose there is some risk and uncertainties associated with this transaction, and our answer is 12 lakh. This is without taking risk and uncertainties associated with that transaction. Can you say whatever this outflow was based on past transaction, but in future due to inflation this may increase? Are you getting? Means this 1000, 2500 based on past transaction, but in future the amount of major defect may be more than 2500. So can I say it might happen we are paying in excess of expected present value? Are you getting? So some adjustment is required. So they have given 3 ways of adjusting the present value of expected amount. Understood? So either Bora, you should increase this amount. So amount will be given. Suppose they have given risk adjusted amount is 1 lakh. The amount of provision become how much? 13 lakh. Suppose this 12 crore is present value. So 12 crore plus what? 1 lakh. Or you need to increase this. They will say that there is an inflation of 5%. So 1000 plus 5%, 2500 plus 5% you will do. Correct? And then calculate present value by applying weighted average. Or we need to do some adjustment to discount rate. Suppose discount rate was given 10% and risk adjusted is what? 2%. 8%. You will add it or you will deduct it? Very good. Have you understood why you will deduct it? Because whenever rate of interest decreases, present value increases. This point you know from FM. So risk adjustment in the rate of discount, you will not add it, you will deduct it. So 10% is the current market rate of interest, but it might happen in future, the rate of interest might change. So risk adjustment will be given. Suppose in the question they have given 2% should be considered. Therefore the rate of discount will be 10% minus 2%. Understood? So either of these 3 information will be given. You need to apply that. Super easy, correct? Let us take one question, question number 6. Question number 6, what they have given. X Solar Power Limited, a power company, has a present obligation to dismantle its plant after 35 years of useful life. So they have a present obligation to dismantle the plant after how many years? 35 years, correct? Dismantle it. So whenever they will dismantle it, we need to incur some dismantling costs, removing costs, etc. Correct? Yes, sir. So X Solar Power Limited cannot cancel this obligation or transfer to third party. Means there is a present obligation and outflow is also probable. Means provision is required. Provision is required. X Solar Power Limited has estimated that total cost of dismantling is 50 lakh and the present value which is 30 lakh. So will you consider 50 or 30? 30 lakh, because the time value of money is material 35 years. They have given present value. Thank you very much. Yes, sir. Based on the facts and circumstances, X Limited consider the risk factor is 5%, that risk that actual outflow would be more than expected present value. So it means what they are saying, the amount will be actually 5% more. So we need to add 5% to what? 30 lakh. Means we need to increase 30 lakh by what? 5%. That will be the amount of provision. Super easy. This type of question can come up for 4 marks. Means super easy, but student may be confused about this 5%. What need to be done? If they have not done it or they have forgotten, they may be confused. Understood? It means the amount of provision will be what? 30 lakh plus 1,50,000. That is 31,50,000. Easy. This type of question may come, or they may give you some question regarding the increase in discount, adjustment in discount rate or adjustment in the outflow, estimated outflow. Understood? So you can do as per the information given in the question. Correct? This also, so you can add on refer which question we have done right now. Question number. So with this measurement over, means now from my point of view chapter is completed. From my point of view, not from Ind AS 37 point of view, but from my point of view chapter is completed. Means now whatever discussion is done is based on whatever we have done till now. Whatever discussion will be done is based on what? Whatever we have done till now. Means they have given some special case. Means can I say special case? The treatment will be based on whatever we have done. So let us understand one by one the special point of this chapter. Correct? First point is reimbursement. First point is reimbursement. Reimbursement, I hope from the word you have understood. Let me take one question example. If I take one example for reimbursement, suppose on 31st March, you need to apply your common sense now. On 31st March, a legal case is pending. Now legal case is pending due to some fraud committed by one of the directors. Fraud committed by Mr. X director. But a case is filed against company. So court will ask to pay compensation. Compensation is payable by company, not by Mr. X. Correct now? And suppose legal case is pending, all 3 conditions satisfied and provision is required. Correct? We need to assume that, then only we can what? Proceed. Provision required, and we can estimate also as per the expert opinion given by the lawyer, the best amount of expenditure is suppose 10 lakh. Correct? Understood? Provision is required, we can pass a journal entry. But what Mr. X has said, Mr. X has given a guarantee, a commitment, has given a commitment that he will reimburse the amount as decided by the court, because the fraud was committed by Mr. X. Understood? Is quite possible. So what commitment has been given by Mr. X, that he will reimburse the entire amount of compensation, compensation means when I am saying this obligation is outflow for the company, and this reimbursement is inflow for the company. Correct? Now first question, apply your common sense whether provision is required or not required. Whether provision is required or not required. This is the first question. Have you understood this point? The entire thing have you understood? Once again I will repeat. Have you understood? Once again I will repeat. The legal case is with company, not in the name of director, it is in the name of company. Means the amount is payable by company. Correct? And all conditions satisfied, provision is required, best amount is also 10 lakh already calculated. Correct? Now Mr. X, because he was one of the director, fraud was done by him, he has given a commitment to whom? Company, that whatever amount is required to be compensated, I will pay the amount. Mr. X will pay the amount. So that is reimbursement. Correct? So this provision represent outflow, reimbursement represent inflow for the company. Correct? Are bolna re? Correct. Now question is that first question, provision is required or not required? Yes or no? Required or not required? Required, because these two are two separate transactions. You cannot combine it. They have given commitment. It does not mean they will fulfill it. Understood now? Right now they have committed. I may commit anything to anyone. Are you able to understand? So these are two separate transactions. They are two separate transactions. So this provision is required, no doubt about that. Means the reimbursement will not affect the recognition of provision. First point you understood? Correct? Reimbursement will not affect the recognition of provision. This point you have understood. Provision is separate thing. We need to recognize it if all the three conditions are satisfied. Now the question is that, what about this inflow? You need to answer. I am giving you 1 minute, think and say. If you can say, means you have understood whatever we have done till. Should we recognize this inflow or should we ignore it? We should disclose or we should recognize? Recognize means recognize it as an asset. Disclose means what? So, what? We should recognize it or we should disclose it? Recognize. You are saying recognize. How many are saying disclose? Disclose. Any alternative answer? Disclose. 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 जो मर्जी है, राम भरोसे. Disclose. Nalayak, till now you have not understood. You are not applying India's 37. Till now you are a CA interest. Till now you have not understood. Inflow means just say, sir, whether it is virtually certain. Say like this. I have not informed you anything about virtual certainty or probable. If you are saying recognize, it means you are assuming it, the inflow is virtually certain. And when you are saying disclose, it means you are assuming it is probable. Means, can you say it will be treated as simple as whatever we have done for what? Possible asset. It is a possible asset. If it is virtually certain, then what? Can you say that information will be given in the question? It might happen, commitment given with an agreement become what? Virtually certain. Correct now? That information may be given. Bolo yes or no? Correct. So virtually certain, if it is virtually certain, recognize it as an asset. If it is probable, then what? Disclose it as a contingent asset. And if it is not probable, then no treatment. I said apply whatever we have done. Is now I will understand whether you have understood or not. Correct? Can I say any question of this nature you can do it if you have understood till now whatever we have done? Nothing extra we are doing now. Can I proceed? Now, any type of example can be asked. Exam. Correct? Understood. So what is given? Let us check. When expenditure required to be settled is expected to be reimbursed by a third party. Third party can be insurance company also. Third party can be any party. It can be insurance company also. Correct? Yes, sir. So when expenditure is required to be settled is expected to be reimbursed by third party, then it is known as reimbursement. And if reimbursement is virtually certain, its chances are more than 95%, then recognize reimbursement as a separate asset. As a separate asset. In balance sheet. Separate asset in balance sheet. Correct? Means, can I say in this way? They are saying recognize it as a separate asset. It means what? In my example, suppose provision is 10 lakh. The provision amount was what? 10 lakh. Correct? And because they have committed a full amount to be compensated and it is virtual certainty, so it will be recognized as a separate asset 10 lakh. Correct? Now in balance sheet, but in liability, how much we write down? 10 lakh or nil? Means can we set off? Bolo. Can we set off? Yes or no? It is given in the Ind AS 37 only as a separate asset. Means it will not be set off with the amount of provision. Means amount of provision will be how much? 10 lakh. And amount of reimbursement asset will be how much? 10 lakh. So it will be recognized as a separate asset and it will not be set off. Correct? And can I say in SOPL, just try to understand in SOPL right now I am drawing horizontal format. It does not mean we follow horizontal format. Okay? We follow which format? Vertical format. Now in SOPL, we write on expense. So expense means provision is an expense. We recognize 10 lakh. Some side. Correct? We recognize expense of 10 lakh. Now reimbursement means gain. Reimbursement means gain or income. Are bolna rahe? So this gain should be recognized as a separate income or gain or can be set off with expense. What do you think? So what Ind AS 37 says that if reimbursement is virtually certain, so actually there is no expense. Actually there is no loss. Correct now. So why you are recognizing gain or expense separately? So in SOPL it can be set off. But this provision and asset cannot be set off. Understood? So this gain from reimbursement will be set off and the expense will be nil. Can you see the amount of reimbursement should not exceed the amount of provision? This amount of reimbursement, whatever you have estimated, should be either equal to the amount of provision or less than the amount of provision, but it cannot be more than the amount of provision. Understood? Have you understood? This is very important from examination point of view. This point. Have you understood this point? Bol. Yes, sir. Correct. Let's see what is given. Written? Recognize reimbursement as separate asset. Such amount is set off against provision and the net amount is shown in PL. Means in PL it can be set off, but in balance sheet it will be recognized as a separate asset. Such amount is set off against provision and net amount is shown in profit and loss. Correct? Amount recognized as reimbursement asset should not exceed the amount of provision. In any case, the amount of reimbursement should not exceed the amount of provision. Then it will violate conservatism principle. Because we are recognizing gain in that case. Understood? Yes, sir. Now, if it is not virtually certain, means either it is probable or not probable. Probable means contingent asset. Not probable means no treatment. That is only given. Not recognized as an asset. However, if the inflow is probable, expected reimbursement should be disclosed in notes to account. If it is not probable, no treatment. Super easy. Correct? Refer question number 8 and 27. Question number 8 and 27. Come to question 8. Question number 8. X Beauty Solution Limited is selling cosmetic product under its brand name B, but it is getting its product manufactured from Y Limited. X Limited is selling cosmetic product and that product is manufactured by Y Limited. It has an understanding with Y Limited, understanding with Y Limited that if the company become liable for any damage claim due to any injury or harm to the customer of the cosmetic product, means when we apply cosmetic product there may be some skin damage, correct? Now, so there is an understanding between X Limited and Y Limited that 30% will be reimbursed to it by Y Limited. There is an understanding. During the financial year 2001-2002, a claim of 30 lakh demanded by the customer from X Beauty Solution Limited. So claim was demanded by the customer amounting to rupees 30 lakh. Correct? Understood? How should X Beauty Solution Limited amount for the claim that become payable? So of course it has been demanded. And from the question it may be understood, because it is a question of reimbursement, we'll assume that it require a provision. From the question information, provision is required. Provision will be what? 30 lakh or it will be 70% of 30 lakh? 30 lakh or 70% of? Very good. So provision, no doubt it will be 30 lakh. Now the question is that should we recognize reimbursement asset? Yes or no? If it is virtually certain, we recognize. If it is not virtually certain, then do not recognize. Now from the question what you understood, it has an understanding. Understanding means what? Understanding means we have an understanding right now. We do not have any contract, but we have an understanding that I will complete the syllabus, and because of that reason you have paid me the fees. But we do not have any contract now. No written contract. But it is a contract or it is not a contract? In our case it is a contract. Understanding is there na. I will complete syllabus as per ICI. Are bolna re? So if I am not teaching you as per ICI, whether this contract is violated or not violated. It is a contract enforceable by law na? Yes, it is a contract enforceable by law because it is an oral contract or implied contract. Contract is contract whether it is express or implied. Correct now? So understanding means what? It is a contract enforceable by law. Means there is a binding commitment. Are bolna re? So it is virtually certain, means from the question it is understood because they have given the word understanding. It means there is a virtual certainty that amount will be reimbursed, therefore it should be recognized as an asset. But suppose in exam if you have a doubt in this case, but right now I have explained you. So I already said whenever you have doubt, give both the answer. If it is virtual certain, asset. If it is not virtually certain, if it is probable, then what? Whenever you have doubt, give both the answers so that they will understand that you know everything. Correct now. Right now I have explained you, so you can understand. Yes, understanding means there is a contract enforceable by law. Therefore, in this suggested solution they have given yes, we should recognize, because since the understanding, they have also written, since the understanding result in enforceable agreement, so there is a virtual certainty. Understood? Correct? One more question I will take because this is very important from examination point of view. 27. Come to 27. 27. Question 29. Change it. Change reference. Question 29. Very good question. Very good question. During the year QA Limited delivered manufactured product to customer K. The product were faulty on 1st October 2016. Customer K commenced legal action against company claiming damages in respect of losses due to supply of faulty product. Means customer K has filed a case against QA. Upon investigation, the matter QA Limited discovered that product were faulty due to defective raw material purchased from supplier F. Now QA will file a case against F. Correct now. Read for tat. Therefore, on 1st December 2016, company commenced legal action against F claiming damages in respect of the supply of defective raw material. Means two cases was filed. One is filed by the customer of QA against QA. One is filed by QA against their supplier F. The date is different. This is what which date? 1st October 2016. This is 1st December 2016. But the case was filed before reporting date, both the case. QA Limited has estimated that its probability of success of both legal action, the action of K against QA Limited and action of QA Limited against F is very high. This sentence is thoda dangerous. What they have given? QA Limited, of course QA will estimate, because we are doing question from which company point of view? QA has estimated that its probability of success of both legal action, the action of K against QA, the action of customer against QA, and action of QA against F is very high. What does it mean? Means you are saying in both cases they will win. Whether it is practically possible? No, whether it is practically possible. In both cases QA will win? Practically impossible. Therefore you need to apply common sense. But when you read, actually it seems that it is high from whose point of view? QA, but not. If you read carefully, the action of K against QA Limited is high. Means in the first case, who will win? K will win. In the second case, the action of QA against F is high. Means who will win? QA will. Dangerous. Dangerous. This is very funny language. Understood? Prima facie, it looks that in both cases, who is winning? QA. But practically impossible. You need to apply common sense also in exam. Understood? Yes, sir. Chalo. On 1st October 2016 means the date of case, date of filing the case. QA Limited has estimated that damage it would have to pay K would be 5 crore. Means this is on the date of filing the case. This estimate was revised to 5.2 crore as on 31st March 2017. Means on reporting date, estimation has been changed. From 5 crore it become 5.2 crore. And 5.25 crore on 15 May 2017. 15 May 2017, maybe some other date after reporting date. This case was eventually settled on 1st June 2017 when the company paid damages of rupees 5.3 crore to K. Oh my God. They have given how many amount? 4 amount. Super question. Super easy but super dangerous. Thoda sa lack of concentration will not be able to answer properly. And most of the students do not concentrate in exam hall. They have exam phobia. First question not understood, then all question not understood. Due to exam phobia. Let us read. On 1st December 2016, QA Limited has estimated that it would receive the damage of 3.5 crore from F. receive means inflow. The estimate was revised to 3.6 crore on 31st March 2017, which became 3.7 crore on 15 May 2017. The case was eventually settled on 1st June. Date of settlement for both cases same, when F paid 3.7 crore to QA Limited. QA Limited had his financial statement for the year ended 31st March 2017, provided rupees 3.6 crore as in financial statement were approved by Board of Directors on 26 April 2017. Means the date of approval is also given. Means AS4. Now you all know AS4. I have not done Ind AS 10. Do you know AS4? Event occurring after balance sheet date. That only AS you have understood. Only one AS which you have understood in your CA enter was what AS4. Adjusting, non-adjusting. Adjusting will be adjusted. Non-adjusting will not be adjusted. Only this much AS is over. Correct now? Are you with me only? Yes sir. I will explain, don't worry. Point number 1, point number 2, they have asked 2 questions and they have asked 3 questions, but super question. Can I explain 1 second? Because I know what you have understood. Can I explain 1 second? Yes sir. So we are doing which question? This is question number 29. So question 29, can you give me the date? Date. This is what QA. This is customer K. This is F. One case, one case. Correct? The date of this case is what? 1st October. 1st October 2016. This case was filed on 1st December 2016. Then what will come? 31st March 2017. This is 31st March 2017. Then they have given 15th May na? 15th May 2017. 15th May 2017. Then they have given what? First settlement date is what? 1st June 2017. This is 1st June 2017. The amount of estimation is given. It is 5.2, 5.25 and actually it is 5.3. Correct? So it is 5 crore, 5.2 crore, 5.25, it is 5.3. Reimbursement estimated amount is what? It is 3.5, 3.6, 3.7. 3.5, 3.6, 3.7 crore and then actual is what? 3.75. And there is one date of approval. What is the date of approval? 26th April. 26th April. Correct? 2017, sorry. The entire. When you write the information, then only you will understand. And most of the students think they are Paramatma. But we are not Paramatma, we are Atma. And most of the students only read it and they will not understand the exact information and they will write thinking that they are writing correct. But actually they will be writing wrong answer in exam hall. There is a different situation in classroom and in exam hall. Same question can be asked in exam hall. You have done this question many times before exam, but in exam hall you may have taken wrong amount because you have not read it carefully. I hope now you are able to understand. But what will be the amount of provision? What will be the amount of provision? Provision we create on which date? On 110 or on 31st March? So what will be the amount of provision? 5 point, whether it will be 5 or 5.2 or 5.25 or 5.3? 5.2? Because can you see these two are bakwas? Because these are event occurring after approval of financial statement. Therefore AS4 or Ind AS 10 is not applicable. Correct now? So these two are bakwas information. They have given only to confuse you. They have increased the length of the question only to trouble you in exam. So can you say provision will be 5.2? Correct? Yes sir. Now What will be the reimbursement amount if suppose asset is recognized? I mean, we don't know whether asset should be recognized or it should not be recognized. But which amount will take? 3.5 or 3.6 or 3.7 or 3.75? 3.6. Now doubt will come whether we should recognize or we should not recognize. What do you think? We should recognize or we should not recognize? Whether it is virtually certain? Abhi on this date, whether it is virtually certain because case is not decided. Whether it is virtually certain? No, virtually certain means chances are more than 95%. But it is not virtually certain because case is not yet decided. Agar before 31st March, case is decided, it become what? Virtually certain. But right now it is not virtually certain. Therefore, it will not be recognized as a reimbursement asset. But it is probable. If correct, it is probable. Therefore, it should be disclosed as contingent asset. Understood? Easy or not? Easy. But when you read and when you have understood the question, in CA exam, concept is important. But before concept, you should understand the question. You can answer only when you have understood the question. You may be conceptually strong, but you are not able to understand the question. What you write, can't apply the concept. Have you understood this? Let's see what 3 questions they have asked. Now you will be able to understand whether the company is required to make provision for the claim from customer K as per applicable Ind AS. If yes, please give the rationale for the same. Whether provision is required? Yes. Rationale 3 condition is satisfied. Correct? Yes. If the answer to A above is yes, they have given also in point number 2, answer will be yes only. Correct? What is the entry to pass in the books of account for creating provision? For creating provision, what will be journal entry? For recognizing provision, what is the journal entry? Please don't ask me. PL account debit to provision for legal damages or whatever they are given. Let's see. SOPL account debit first, which amount will take? 5.2, 5.3, 5.25. 5.2 na? 5.2. So this is totally wrong. So journal entry is why statement of PL to current liability. Why it is current liability? Because it is payable within 1 year. So it become current liability. Understood? However, from amount you can understand point number A is correct. Yes, sir. What will be the accounting treatment for the action of QA against supplier F as per applicable Ind AS? To write down, it is not virtually certain, it is probable, therefore disclosure is required. That is only given, check. Understood? This answer is not at all important. 2 things is important, concept and question. So you can write down by your own. Normally what I have seen in CA Inter, what you used to do to take coaching class without understanding concept is you have covered the syllabus, then you used to read question, read answer, and you try to understand concept through solution, and then if that question will come, you will be able to write, and that you follow in what? Say final exam. And because of that reason student fail. So CA final exam syllabus is so vast that you can't retain in the mind all these questions. Concept can be retained, solution can't be retained. Understood? Simple or not? Simple. I am taking time, chapter Ind AS 37. I am taking time because I am just informing you what is the level of CA final. Ind AS 37, if I could have completed in 2 hours also, but then same thing CA Inter would have been repeated. And believe me, if I would have completed within 2 hours also, now you would be able to understand all the questions. But whether you can understand conceptually, that would have been doubt. So I'm just taking some time so that you become adapted to me. Next point is future operating loss. Let me take one example. Means I can explain also without taking example, and you will be able to understand. But I am taking example so that you can relate the concept practically. So future operating loss. Let me take an example. You will say me what will be the answer. Are we ready? Future operating loss example. Suppose we have one factory 1, we have factory 2. This factory one is profit making. Suppose 10 crore is the profit of the current year, 2000, 2021-22, and this factory 2 is a loss making, quite possible, correct? And suppose there is a loss of 2 crore, correct? And we have decided, means management had decided to close down, decided to close down, but not yet closed it. Decided, might happen, actual closing may come after 3 years. Decided to close down because of huge losses, correct? And they are expecting a loss of 5 crore in which year? 2022 and 23. Actual closing will be after 3 years. Actual closing will be after 3 years. Understood? Bolna re. Because closing down will take time. I have decided it does not mean we'll close today only. It takes time. The question is that should we recognize provision for this loss? Yes or no? Yes or no? If you are saying yes, give me reason. If you are saying no, give me reason. So how many are saying yes? No one saying. How many are saying no? Everyone saying. How many are saying half yes, half no? So those who are saying no, can anyone explain me why it is no? Well, it is not past event, it is future event. Correct now? Till now business has not done. Till now operation has not done for next year. It is depending on future event. Understood? Therefore, it is not covered only in this chapter, I will say. Understood? So can you say no provision? No provision. So we disclose contingent liability as a contingent liability? Whole yes or no? No contingent. Because both are based on what? Past event. No contingent liability. So it means future operating loss, neither provision should be created nor contingent liability should be. Simple. Simple. I could have given a better example. This was easy. Let me take one more example. In that example, you could have been confused. It was thoda easy. Okay, one more example I will take. What happened? This is 2020-21. I am taking classes, face-to-face classes, and I am generating huge profit from this because you all are dependent on coaching. Correct now? So suppose 2 lakh. But what happened? At the end of the year, COVID-19 lockdown announced. Now I need to change from face to face to virtual. And now I am expecting a loss of 1 lakh. Without. Should we create a provision? If I would have given this example before, now you could have been confused. But now, this is also future operating loss. Depends upon future business, na. Depend upon future event. When you will do business, then loss will occur. This is only my expectation that I may incur a loss of what? Due to lockdown. Understood? So this is based on future event. For future operating loss, for whatever reason, will never create any provision. Understood? Therefore, no provision is required. No provision is required for future operating losses. Not impairment losses. Asset might be impaired. That is coming soon in your life. I'm saying operating losses. Operating losses means business profit. Business profit. My asset might be impaired. For asset impairment, we need to refer Ind AS 36. Correct? Understood? Are bolna re? Yes, sir. That is only given. Neither provision nor contingent liability as it is related to future event. Correct? Next point is executory contract. Do you know about executory contract? Contract act done, now you are saying no, sir. Huh? Employment contract. Example I am not. Definition. Future contract. Not be correct. Any contract which is either partially performed by both the party or not yet performed by both the party. Means, can I say every contract there is obligation of both the party, and both party has either not yet performed their obligation or partially performed their obligation, that is known as executory contract. Now one question arises, should we recognize provision for executory contract? Let me take one example, apply your common sense. From my point of view, you are not referring what is given in this Ind AS Saransh book. Don't read till I read. Correct? I'm taking a very good example. Also, this example has been asked in exam. Suppose we have done a contract on 1/4/2021 to purchase a machinery for which delivery is planned on 30th June 2022. Correct? An amount payable is 10 lakh. Amount payable 10 lakh. Can you say it is an executory contract where both party has not performed their obligation, because one party has not paid the amount, other party has not delivered the machinery because it was planned to be delivered on next year, not in this financial year. Question is that it is an agreement, contract. Question is that should we recognize a liability in the books of this Mr. X? Mr. X is purchasing. Should we recognize a liability? A contract has been done. What do you think? Should we recognize liability? Because a contract is there that delivery need to be done on 30th June 2022 and amount is payable 10 lakh. So for this 10 lakh, should we recognize the liability? Yes or no? Executory contract. Contract is done. Contract. Agreed. Agreed means it cannot be what? This contract cannot be cancelled. I can write down in this way. Non-cancelable. Non-cancelable contract are those contracts which can be cancelled upon payment of penalty. Correct? So non-cancelable contract means it can be cancelled but upon payment of penalty. Understood? It is a non-cancelable contract. Should we recognize a provision or liability of 10 lakh? Yes or no? Apply your common sense. Yes or no? Why? Once again, future event. Future event na. First to this need to be delivered now. So both party has not performed their part of obligation. So for executory contract, Ind AS 37 says it will not be applicable. What is not applicable? Ind AS 37 is not applicable. Correct? Even though it is an agreed contract, but we do accounting from the point of view of agreement or from the point of view of substance. Substance of a form, that apply accounting treatment based on actual happening, not based on legal document. There may be a contract, but from contract point of view, we never do accounting. We do accounting from the point of view of substance. And substance is that actually the machinery has not yet delivered, so there is no obligation to pay. There is no obligation to pay. So for executory contract, what is not applicable? Ind AS 37 is not applicable. But now I will change the example. Contract is there, same example. What happened on 1st Feb 2021, means in the current year? Mr. X has decided to change the production process. Has changed the production process. Quite possible. And now this machinery, which is not yet delivered, is of no use. Means if delivered, it cannot be used. Means it can only sold. Correct? And the estimated means it can be sold. NRB, you know, net realizable value, means if delivered, it can be sold in the market at rupees 2 lakh. Understood? Or they can cancel it by payment of penalty, or they can come out of contract by payment of penalty to the other party, and the amount of penalty is 1,50,000. Understood? Correct? Just try to understand whatever I am saying. What actually happened in the first example, whatever we have discussed, it was an executory contract, because both party has not performed their part of obligation. But in the second example, second situation, I have said that still it is an executory contract. But now Mr. X has changed the production process, and this machinery is not in use. Please, can I see this contract become a burden? The contract become a burden. So this executory contract has become onerous contract. We call it onerous contract. What is the meaning of onerous contract? Onerous contract are those executory contract. Onerous contract are those executory contract where the expected benefit from that contract is less than cost of meeting the obligation. Means benefit is less than cost. So what is the cost of this contract? How much the amount is payable? 10 lakh. And once purchased, it can be sold at? So what is the cost of meeting the obligation? 8 lakh. And they can come out of this contract by payment of penalty. So payment of penalty. Understood? Correct? Are you getting whatever I am saying? Means either they can cancel the contract, or they will purchase it and sell it in the market. Are you bolna yes or no? So what is the cost of meeting the obligation? 8 lakh. Correct? Which is more than expected benefit, because they will not use it. Therefore it will become an onerous contract. My question is that, should we recognize provision now? Yes. Ind AS 37 says, once the executory contract become onerous is burden, then apply Ind AS 37 and create provision. Can you give me the amount of provision? What will be the amount of provision? 1,50,000. Means, can I say lower of these two? Lower of cost of meeting the obligation of penalty payable to exit the contract. Can I say, even though we have not done, if this case study will come in exam, can you apply your common sense and do it by your own? Yes, sir. Means even though you have forgotten the concept, I will say apply your common sense. Means attempt every question even though you don't know. Some answer will come. And it has been seen that if you answer 70% time, you will be correct. 70% time you will be correct. But you need to apply your common sense. If you are not applying common sense, then no one can help you. Even God can't help you. Understood? Humble. Doubt will come. Whatever doubt is coming, you can ask. No, the condition is there now. Why once this is the present, this is the past event. Now due to past event there is a present obligation arising from past event, because you need to pay now, and the outflow of resource is probable now. Now this is the past event, now change in the production process. Change in the production process, so due to this past event there is a present obligation or not, and the outflow of resource is probable. Either you need to pay 10 lakh or you need to pay 1,50,000. In any case you need to pay. All the conditions are satisfied. But a special case is given, onerous contract. Whenever there is an onerous contract, means expected cost of meeting the obligation is more than what? Expected benefit. So for that you need to create a provision. For that you need to create a provision. But if it is only an executory contract, no provision is required. So onerous contract are what? Executory contract only. And so let's see what is given. Let's see what is given. Ind AS 37 is not applicable to executory contract unless it is onerous. Understood? Sentence you have understood? Unless it is onerous. Keyword is what? Unless it is onerous. In other words, it is applicable to which contract? Onerous contract. What is the meaning of onerous contract? Executory contract in which unavoidable cost of meeting the obligation, unavoidable cost of meeting the obligation, the cost which cannot be avoided. Unavoidable cost of meeting the obligation exceed the economic benefit expected to be received from such contract. Unavoidable cost of meeting the obligation exceed the expected benefit to be received from such contract. Of course, when we are not using the machinery, no benefit, only we can sell it. Correct? In this case, amount of provision will be unavoidable cost. An unavoidable cost will be lower of cost of fulfilling the obligation or penalty payable to exit from the contract. Penalty payable to exit from the contract. Understood? I hope you have understood. Any doubt you can ask. Means right now whatever special case we have done, if you are applying your common sense with the concept, you will be able to answer. You will be able to answer whatever question is asked in exam. Whatever question is asked in exam. Just write down. For question number 11, this is very important. Question number 11 and question number 28. This you do by your own. Understood? So we have done reimbursement, we have done future operating loss, we have done what? Executory contract and onerous contract. Done? Correct. This summary already we have done. Correct? Yes, sir. Changes in provision. Changes in provision, simple point, nothing to explain much. Can I say at each reporting date, the amount of provision should be reviewed. Circumstances may change, so amount of best estimate may change. We need to change the amount of provision. If provision is no longer required, why it is no longer required? Because present obligation may become possible obligation, or present obligation may become remote obligation. Then reverse the amount of provision. Simple. Correct? Yes, sir. The provision must be reviewed at each reporting date and adjusted to reflect the best current estimate. We'll do plus minus provision. If provision is no longer required as it is not probable, amount of provision must be reversed. Understood? Now, let me ask you one point. This you have understood? Initially I have said, if suppose amount was payable after 5 years. This was 10 lakh. And this is the reporting date. So we need to find out what present value. Suppose the rate of interest is 10%. Can you give me the amount of present value? You are expert in that. Present value will be equal to what? This will be 10 lakh multiplied by 10 lakh multiplied by, can you give me the present value factor? 0. is for 1 year. 3 point, sorry. Hat nalayak, this is payable after 5 year. You will do plus 1 year, 2 year. What? FM I will teach. Give me FM piece also. 0 point what? 620. Oh my god, itna time lagta hai present. This will be 620 na? It is payable at the end of 5th year. We don't require annuity factor. I want present value factor as per mathematics. So it will be 6,20,000. Correct? So what journal entry you have recognized ki PL account debit to provision? How much? 6,20,000. But at the end of the 5th year, you will pay how much? Suppose there is no change in the amount. This amount is the actual amount also. Let us assume. Our best estimate is actual estimate, which is quite impossible. And suppose the amount actually paid is 10 lakh. So you will pay 10 lakh. So difference is what? 3,80,000. What is this 3,80,000? This 3,80,000 is what? Because you will pay 10 lakh now, means what journal entry will pass? Provision account debit to bank, and bank will be 10 lakh. Bolna yes or no? So my question to you all, at the end of the 5th year, 6,20,000 should become 10 lakh. 6,20,000 should become 10 lakh. The difference between these two is 3,80,000. So what is this 3,80,000? 3,80,000 is what? Difference between present value and future value is what? Interest. Interest बोलने में time लगता है. How much time you are taking to say only interest? Interest only na. So can you say this is interest component? Oh, अच्छा, ये बात. It means, can I say we should, after discounting every year, we should also compound it. Compounding, processing of discounting. Counting, deleting interest. Compounding means adding interest. Correct? So can I say once you have recognized the discounted amount should be compounded, and every year interest will be added, and that interest will be considered as borrowing cost. Means, can I say the carrying amount of provision will be increased due to compounding, and that increased carrying amount, the amount by which the carrying amount has increased, will be considered as borrowing cost, and borrowing cost will be also charged to. This compounding is known as unwinding of provided amount. One new name has been given under Ind AS, unwinding. Means first 10 lakh was discounted, and then we are doing unwinding. So one new name has been given, unwinding of discounted amount. Unwinding of discounting amount means we are adding what? Interest. Unwinding is nothing but compounding. Unwinding is nothing but compounding as per mathematics. Understood? Same thing is given. Let us check what is given. Unwinding of provisional amount. Correct? When discounting is used, when time value of money is material. When you will use discounting, when time value of money is material. Carrying amount of provision increases every year. Carrying amount will increase every year. Means every year you need to add interest 10%, 10%, 10%, 10%, 10% for 5 years. That increased amount is treated as borrowing cost, which will be charged to profit and. Have you understood? I hope you are understanding. Simple. Just write down refer, because today I will not take this question. Question number 9. Simple question, but I will do not today, tomorrow. This question number 9. But I think has been. I have deleted some question. Adjusted some question. So okay, I will correct it. Understood? Yes, sir. Then use of provision. My question is that use of provision, very simple point, only discussion is required. Can we use the provision amount for some other purpose? No. Means it can be used only for that purpose for which it is created. If no longer required, then reverse it. You can't use it for other purpose. Simple. That is point, you know. A provision should be used only for the expenditure for which it was originally recognized. In other words, cannot be used for any other purpose. If no longer required, reverse it. If no longer required, reverse it. I think no discussion required. Accounting treatment. If related to expense, if provision is related to expense, journal entry will be expense to provision, then PL to expense, or directly we can say PL to provision. Compound entry. So this is compound entry, PL account debit to provision. For recognition of provision. For reversal of provision, reverse entry. What journal entry? Provision to PL. Bachpan se you are doing this journal entry, nothing to explain. But if it is related to acquisition or construction of asset, oh God. If it is related to acquisition or construction of asset, then it will be added to the cost price of asset. Simple na. If it is related to acquisition or construction of asset, then it will be added to the cost price of asset, which cost price of property, plant and equipment. Then journal entry will be asset account debit to provision, and if reverse, then provision account debit to asset. But I think this journal entry you have never seen in your life. Bole yes or no? You have never seen in your life. So we'll discuss this point, this journal entry, when I will do Ind AS 16, property, plant and equipment. Just write down, refer Ind AS 16 for this journal entry, because there is only one case when this journal entry will apply, and that will be discussed under Ind AS 16, property, plant and equipment. Correct? Restructuring I will do tomorrow, because it is important concept. I am deferring it. Restructuring take time. Scope. What is the scope of this chapter? Means I am just winding up this chapter now. Normally scope is given at the beginning of Ind AS, but I am given at the end, because when you don't know Ind AS, how can you know Ind AS scope? First you need to understand what is given under Ind AS, then we need to understand what is the scope of this chapter. Scope. Ind AS 37 is not applicable to. It is not applicable to executory contract unless now you know. Correct? It is not applicable to financial instrument. Financial instrument means what? Financial asset and financial liability, which will be covered under Ind AS 32 and Ind AS 109 coming soon in your life. It will change the entire accounting. So financial asset means, we can say example is receivable. A receivable. So any provision for doubtful debt which is not actually a provision is not covered here. Are you getting? So it is not, means financial instrument is not covered. It is outside the scope. We have already discussed na. Provision for doubtful debt is not covered under AS 29, so it is also not covered under Ind AS 37, because actually it is not a provision. Actually it is not a provision. Then income tax, legal obligation, income tax payable. But income tax we have a specific Ind AS. So when we have a specific Ind AS, go to that Ind AS. Correct. So we have a specific Ind AS 12. There we'll discuss about deferred tax and current tax. Deferred tax and current tax. I think you have in your office you have done current tax and deferred tax, but I know what you have done. So detailed discussion will be done under Ind AS 12. Correct. Yeah. Then employee benefit, there may be some provision for gratuity. That is also, that will meet the definition of provision. Provision for gratuity, you know. Correct now. So that employee benefit, whatever provision we are creating, that is covered under Ind AS 90, specific Ind AS. Employee benefit. Means even though it meets the definition of provision, it is not covered under this Ind AS because it is scoped out from Ind AS 37. Insurance contract as specific Ind AS is there, Ind AS 104. Good point is that this is not in our syllabus. Ind AS 104 is not in syllabus. Why it is not in syllabus? Because Ind AS 117 is coming soon. When Ind AS 117 will come, this will be deleted permanently. Therefore, ICA has intentionally deleted this AS because it has not given the correct accounting treatment. So, Ind AS 117 is in the draft state. Understood? Contingent consideration arising in business combination. So, any consideration which is contingent in case of business combination will be covered under Ind AS 104. This will be discussed when we will do Ind AS 104. So, this is the scope which you need to remember. Can remain, but in exam they will never ask direct question what is the scope of Ind AS. Correct now? They may ask question about contingent consideration. So you should think, yes, for contingent consideration in case of business combination, Ind AS 37 is not applicable. What is applicable? Ind AS 103 is. Difference between Ind AS 37 and AS 29 already we have done. First is constructive obligation. Ind AS 37 deals with constructive obligation, but AS 29 is silent regarding what? Constructive obligation. Understood? Then discount allowed if time value of money is material. AS 29 not allowed, but there is only one exception. Only one case AS 29 says discounting is allowed. That exception is due to AS 10 revised. Because AS 10 was revised and AS 10 was exactly similar to International Accounting Standard. So due to revision in AS 10, they have also revised what AS 29. So only in one particular transaction, what is allowed? Discounting is allowed. Not required for CA final examination, but you should know to become CA because you are applying AS 29. So what is that case? We'll do refer Ind AS 60. I will discuss this point under Ind AS 60. All things I will cover, don't worry. Inter, foundation, final, everything will be. First point, second point you understood. Third point about contingent asset required disclosure where? Financial statement. Required disclosure in the report of Pakwas. I have never understood why AS says report of approving. They should say either not disclose or disclose. Correct. Chalo, theek hai. Required disclosure in the report of approving authority. Difference you understood? Then onerous contract. This point intentionally I have not done because till now we have not done the impairment of asset. But onerous contract you have understood? Correct. But Ind AS 37 says it requires recognition of impairment loss on the asset dedicated to such contract before any provision is created as per Ind AS 37. Means if there is any onerous contract and there is some asset, property, plant and equipment related to that contract, first apply impairment point, then create what provision. So can you say this you will automatically understand when we'll do Ind AS related to impairment? Correct now? When we'll do Ind AS related to impairment, automatically this point will be understood. Correct now? This point right now I can't explain, just write down refer Ind AS 36. Ind AS 36. It requires recognition of impairment loss on the asset dedicated to such contract before any provision is created as by Ind AS 37. Means I can explain thoda sa. Whatever example I have taken, this example I have taken onerous contract, this example. So you can see there was one purchase of machinery. Machinery is a property, plant and equipment. So for that asset, first apply Ind AS 36, then apply Ind AS 37. First impairment loss, then provision. This is the meaning. But what is impairment loss? That I can't explain right now. For that we need to refer what Ind AS 36. With this, only one point is left. What is that point left? Restructuring. Restructuring is left. Apart from restructuring, all point this chapter is completed from my point of view. So what you can do, there are only some question related to restructuring. When you read the question bank, you will understand this is a question related to restructuring. Leave that question. All other question you can do by your own. All other question you can do by your own. Correct? Restructuring will take another 15 minutes to explain. Any doubt you have, you can ask me. Any doubt you have, you can ask me. Understood? Correct? So restructuring is left, that I will cover it, don't worry. Correct? Apart from restructuring, this chapter is completed. You have question bank. If you have time, read it. Don't have time, then also don't give excuses. What is the message for today? Every day I give some message which will help you, for final preparation. What is the message? A very good message. You can find an excuse or you can find a way. Either you can give excuse or you will do the work. There are two things. Give excuse or do it. A final student, if they are giving excuse, they will never become. And most of the students fail because they have a lot of excuses. They are busy, the course is complex, they are not habit to study, they have this and this. Correct now. Don't give excuses, find a way. Even though the chapter is complicated, find a way to understand it. The chapter, if it is complicated for you, it is complicated for every CA final student. Not for you, it is complicated for everyone. Even the chapter was complicated for me when I have done CA. Correct? So don't give excuse, find a way to do it. Thank you very much. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining